Hey there, it's me. Welcome back to my channel where I share all things personal finance and entrepreneurship. In today's video, I want to talk about how to turn your savings into passive income. One of the biggest problems that many people have is that they tend to keep their money in a bank account, savings account that is earning very little interest, or maybe even a checking account that is not earning any interest at all. And so in this video, I'm going to share some ideas with you that are gonna allow you to turn your savings into passive income. Make sure you stick around because one of them will shock you. It's definitely not what you think. Number 1, consider opening a high-yield savings account. Now, many banks offer these types of accounts, and they actually pay a higher interest rate than traditional savings accounts. So by keeping your emergency fund or your savings in a high-yield savings account, you can earn more interest and essentially earn passive income by just having your money sit in the bank. Now, the national average for a high-yield savings account is between 3 and 4%, but there are some banks that offer higher rates than that. So make sure you shop around and do your research to find the best rates available. One thing to keep in mind with high-yield savings accounts is that they may have minimum balance requirements in order to earn the advertised interest rate. So make sure you read the fine print and understand the terms and conditions before opening an account. Also, although the interest earned from a high-yield savings account is technically considered taxable income by the IRS, many banks will actually report the interest payments to the IRS for you. So that means you don't have to worry about filing any complicated documents or making estimated tax payments throughout the year. This can make it a convenient option for those who want to earn a little bit of extra passive income without having to do much work at all. Next up, consider investing in a CD or certificate of deposit. CDs typically offer higher interest rates than savings accounts because you agree to keep your money in the account for a set period of time, which is known as the term of the CD. Now, the longer the term, the higher the interest rate you'll likely receive. However, if you need to access your money before the term ends, you may have to pay an early withdrawal penalty. So, this is something to keep in mind. On the plus side, CDs are generally considered to be very safe investments because they are insured by the FDIC or the NCUA, depending on where you choose to open your account. This means that if the bank fails, you'll still be able to get your money back along with the interest that you earned. However, like I mentioned, if you need to withdraw your money early, you could lose some of that interest. Next up, consider investing in Treasury securities. Now, these are actually loans that you make to the US government, and they're considered to be one of the safest investments that you can make. Because they're backed by the full faith of the US government. The best part is that Treasury securities offer a variety of different terms to choose from, ranging from a few months to 30 years. So you can choose a term that fits your needs and your time horizon. Additionally, Treasury securities are available in a range of denominations, which means that you can invest as much or as little money as you like. You can buy them directly from the US Treasury website or through a brokerage account. Now, one potential downside of investing in Treasury securities is that the interest rates that they offer may be lower than other types of investments such as corporate bonds or stocks. However, when you consider the safety and security of these investments, it may be worth it to you to sacrifice a little bit of potential return for peace of mind. Next up, we have real estate. This can be a great way to generate passive income because once you've paid off the mortgage, any rental income you receive is essentially profit. Plus, you can take advantage of tax deductions such as mortgage interest and property taxes. You can also increase the value of your property by making improvements or renovations. And then you can potentially sell the property for a profit down the road. But if you don't want to be a landlord or you don't have the capital to invest in a rental property, you might want to consider becoming a real estate investor without actually having to buy a property. There are a couple of ways that you can do this. First, you can invest in REITs or real estate investment trusts. These are companies that own and manage income-producing real estate properties, and they trade on major stock exchanges like the New York Stock Exchange and the NASDAQ. By investing in REITs, you can get exposure to the real estate market without having to buy or manage any property yourself. REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends, which can provide a steady stream of passive income. Another way that you can invest in real estate without actually buying a property is by investing in a real estate crowdfunding platform. Now, these platforms allow you to invest in various real estate projects and developments with relatively small amounts of money. With real estate crowdfunding, you can diversify your portfolio and potentially earn higher returns than traditional investments like stocks or bonds. Just be sure to do your research and only invest in projects that you feel comfortable with. Next up, we have peer-to-peer lending. This is another way that you can earn passive income by essentially lending money to others. Now, platforms like Lending Club and Prosper allow you to lend money to individuals who need financing for things like home improvement projects, debt consolidation, or starting a business. As a lender, you'll be able to set the terms of the loan, including the interest rate and repayment schedule. You'll also be able to diversify your investments by lending money to multiple borrowers. Now, the interest that you earn from peer-to-peer lending can be higher than what you would earn from a savings account or a CD. But as with any investment, there is risk involved. If a borrower defaults on their loan, you could lose some or all of your investment. So it's important to do your due diligence and only lend money to borrowers that you trust. Alright, next up we have business ownership. This is probably not what you expected to hear, but owning a business is actually one of the best ways to generate passive income because you can create systems and processes that allow your business to continue operating even when you're not actively involved in the day-to-day operations. For example, you can create products or services that can be delivered automatically online. Or you can build a team that can manage the business while you focus on other areas. The best part is that there are many different types of businesses that you can start, so you can choose one that aligns with your interests and skills. But the biggest downside to this option is that starting a business takes time, effort, and money. You'll need to invest time into planning and launching your business, and you may need to invest money into inventory, equipment, or marketing. And last but not least, you can use dividend investing to generate passive income. Dividend investing is a strategy that involves investing in stocks that pay a dividend, which is a portion of the company's profits that is distributed to shareholders. When you invest in a dividend-paying stock, you become a shareholder of that company and you'll receive a portion of the company's profits on a regular basis. The best part is that there are many different types of stocks that pay dividends, so you can choose investments that align with your financial goals and your risk tolerance. You can also reinvest your dividends to buy more shares of stock, which can help you grow your investment over time. To get started with dividend investing, you'll need to open a brokerage account and then fund that account with the money that you want to invest. You can then use that money to buy shares of dividend-paying stocks. Be sure to do your research and only invest in companies that you understand and that you feel comfortable with. And there you have it, 8 great ways to turn your savings into passive income. Which one do you think is the best? Let me know in the comments below. If you enjoyed this video, please give it a thumbs up and share it with your friends. And if you haven't already, be sure to subscribe to my channel for more videos like this one. Thanks for watching, and I'll see you in the next video.